Welcome back, everybody. We have another monthly market update here, and finally, something a little bit interesting to report. So, basically, in the month of October, we finally saw a little bit of optimism in the statistics, but the underlying stories in terms of what's going on out there in the rest of the world and some of the headlines that are the stories or narratives that are bubbling up below the surface, I would say are very concerning. So we have some conflict here, but we have a bit of a change in trajectory versus the last 6-7 months. So I'm excited to talk to you about it. So let's dive into it here. First off, the way that we like to think about these types of things is you just look at the sales volume. How many sales happened? Where did that leave our inventory total? How does sales and inventory as a relationship equaling the months of inventory tell us that things are heading? And then what does that mean in terms of prices? How did the relationship between sales, existing inventory, and what's left at the end of the month correlate into the supply and demand and the output of the average prices? First of all, I'm going to say that prices dropped again. This is the 7th month, I believe the 7th month, if I'm remembering my script correctly. If you want to reference any of this, you can go back to the blog post. I've written a long blog post a couple months in a row here. I think I'm getting better at it than ever. I'm definitely not a writer, but it's a much more specific version of this update, because I don't want to sit here and stare at a huge chart of numbers and bore everybody. This is more of the storyline, but if you want to dig into some of the stats that go along with the story, much better to find them. I could be held more accountable on my blog post than I do on here, as I'm racing against the clock before the kids get off the bus to give you the goods. So let's go back to prices. Prices dropped a little over 1% again, month over month. Now, that's not a lot, but it continues. Prices dropping. It's like water cutting a rock. It just keeps going. It's powerful. Small decreases, but large semi-annual losses if we keep seeing this up. But what was interesting is that the total sales numbers were up in October rather drastically over September's numbers of this year. Now, I went back to 10 years of sales data. It's not totally abnormal to see October have higher sales numbers than September. But from what I saw is that normally if October were to edge out September in terms of total sales numbers, it wasn't by much, normally very close. You're talking like 110 and 115, or 100 and 109. But we went from around 80 in September to over, I believe it was we're at 110 in October, from September having about 80. So a really big jump in the number of sales. And okay, so what's going on here, right? It's not a continued just chug down of sales numbers. And we also saw a slight reversal in the total number of active listings. And so these 2 points combined to leave us with a smaller inventory at the end of the month than we had in September. Pretty positive sales volume activity. Nothing compared to last year, but last year was, and the year prior was extremely abnormal. But a healthy October by a decade's account of sales, and better than September. It left us with a months of inventory metric that was very, I'll say healthy in our case, typically not healthy when you're talking about market health and buyers or sellers market. It would indicate that we are, really returning into a seller's market. Now, everyone's going to say, wait, like how can we possibly be in a seller's market when we're continuing to see these prices slide, decline? Technically, by the textbooks, we've always been in a seller's market. Inventory has never gone above 3 months of inventory throughout this entire price, slide over the last 6 months. But what we're seeing here that is uniquely different is that the rate of change in the trajectory. So not only has the inventory gone down, the months of inventory gone down month over month, it went down pretty drastically. We were at 1.6 months of inventory, if I'm remembering my numbers correctly here. And in the month prior, it was about 2.3. So, I've said this a lot of times now, but for everybody, you think about months of inventory, just think about like a reservoir of anything. How many months of it do you have? So how much money do you have in the bank? if you got laid off and money stopped flowing into your bank account today, how many months can you go without any new money? You can imagine if you got 3 months, okay, you got some time. If you got 1 month or around 1 month, 1.5 months, that's pretty tight. And so think about the inventory that way. If no new listings were to come on tomorrow, and the sales pace continued how it was, we'd be burned through our listings at this point in 1.6 months. It's pretty aggressive. And it really is the first time that I kind of got taken aback by the statistics in 7 months where something sort of bucked what I was expecting to see. And it makes you go, okay, are we really near a bottom? And I don't say the bottom, because we could be near a bottom, because if you look at this on a graph going down, 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 it starts to curve. You have this troughing, you have a flattening. And if the months of inventory trend continued to go like it did last month, it is very plausible that we could see a month-over-month price gain in November. I'll be the first one to say it. The way that all the numbers looked, if everything in my hours of staring at these graphs and listening to other people and talking to people has told me anything, if my intuition is even 1 ounce of correct here, it's that we could see not large, but could see, like an $8,000, $10,000 month-over-month price increase in average sales prices after November's calculated, which would be huge. That would be huge for optimism, show of resilience of a bottom. But what I want to say is why I call it a bottom, not the bottom, is because there's a chance that it's this false floor where, it could tick up a little bit, float along sideways, a little up, and then kaboom, because we've got some real pending, albeit we have extremely conflicting variables in our multivariate equation, that is home prices. We have very many conflicting variables. Of the most bullish or optimistic is that the federal government has announced that they want to immigrate 500,000 new residents next year, topping the record year this year, and just putting more pressure on the true scarcity of housing in our province. That is a very big variable in the discussion and in the equation. But beyond all that, beyond all the hope, beyond sellers not putting inventory on the market quick enough right now, the inventory is shrinking, the 0.5 point interest raise rather than 0.75 point at the last meeting. In addition to all these things, you can lap on all these potential bullish or optimistic arguments, and then you just look at all of the real potential turmoil bubbling below the surface. I'm a part of many pessimistic Facebook groups. I follow a lot of people, Toronto housing bubble, Facebook, Twitter feeds, all this. And, because I want to see both sides objectively. And it really truly is a lot of not so great stuff happening out there with people being overly indebted and insolvent, people being over leveraged, investors that bought too many properties, their properties aren't cash flowing with the interest rate increases. They are becoming insolvent and having a stress sell. But now it's not adding up to real numbers that are affecting our inventory right now, but we're seeing a lot of individuals coming through us as professionals that are sort of starting the consultation about, hey, I'm going to be pretty tight on this. What do I do? Or I bought a couple of pre-construction places and I can't close on them all anymore. What do I do? These types of things where it's not all roses out there, let alone the recessionary forces that we know are out there with potential layoffs and whatnot coming down the pipe. So that's it for this time. I'm going to keep it tight, mainly because my 10-minute timer is up and I've got to go get the kids off the bus. But what I would say is that if anybody wants to carry on this discussion, hit me up in the YouTube comments. Or go to the blog, go to the website, mitchcleary.com/insights, and read some of I really went into more depth on those sub discussions. I sort of broke everything down into the stats and the story. Here's the stats, here's the story for each one of these sort of piles of metrics that we like to break down. So go over there, have a look. You're going to see the link in the description of the podcast and the YouTube video for the blog post. Have a look, and if you need to do anything in the next 3 to 6 months, you're not currently working with a realtor, and you want specific advice for you related to your situation, your cash situation, your employment situation, your family growth or decline, call us, set up an appointment. We've got a team that's here that's ready to chat, and we would love to help you out. That's it for this week, and I'll look forward to talking with everybody soon.